Stock splits are all the rage these days. The most recent companies are Nvidia, Sony, Lam Research, and Chipotle. Walmart also split its stock earlier in January this year. But what exactly is a stock split and how does it affect a company? Hi, I'm Jean, a researcher at Dxpert. A stock split can be defined as an event where a publicly traded company changes the number of shares it has outstanding and the price of each share. This means that the change in share price and the change in the number of shares are proportional. For example, in a 2-for-1 stock split, the number of shares outstanding doubles. The price of each share is halved. So if a company had 1 million shares priced at $100 each, after a 2-for-1 split, it will have 2 million shares priced at $50 each. Nonetheless, a stock split is just a cosmetic move. Therefore, it doesn't change the fundamental value of the company. The company's market capitalization remains the same. Then why does a company do it? When a company's share price rises to a level that may deter some investors or exceeds the prices of comparable companies in the same industry, the company might opt for a stock split. The purpose of a stock split is to lower the share price, making the stock more accessible to retail investors who might be discouraged by higher prices. If the reduced price encourages more buying, it could increase the company's market valuation, potentially raising the price of the company's bonds. Historically, stocks have notched 25% total returns in the 12 months after a split is announced, compared to a 12% for the broad index, according to the BofA Global Research Investment Committee. However, this doesn't happen every time. Some of the outperformance may be due to the fact that companies typically opt for stock splits following a period of strong performance when their stock prices have significantly risen. Take Tesla, for example, which fell nearly 12% in the year after it announced a 3-for-1 stock split back in 2022, while the S&P 500 rose 8% over that same time. Apart from Tesla, most of the companies in the Magnificent Seven have split their stocks. In particular, these 3 companies are historical examples of successful stock splits. Amazon has split its stock 3 times, with the most recent split in June 2022. The day after the split, Amazon's share price increased by 5%. However, a year after the split announcement, Amazon's share price was down 34%. But then, by the start of 2023, Amazon's shares hit their lowest point and have risen by 30% compared to the split announcement approximately 2 years ago. Meanwhile, Alphabet has surged 8% following the announcement of its stock split. Stock split announcements often align with earnings reports, bringing multiple factors into play. However, the initial excitement faded quickly. Despite hitting a split-adjusted share price of $148 the day after the announcement, Alphabet's shares dropped to $83 per share by November 2022. Currently, Alphabet's share price has rebounded, trading roughly 27% higher than when the stock split has announced. Apple has had 4 stock splits, the latest in 2020, with a 10% increase the day after the announcement. Despite declines in later years, Apple stock did not drop as dramatically as Amazon and Alphabet. Overall, Apple has seen a remarkable 98% increase in less than 4 years since its last split. This impressive growth is noteworthy for a company valued at nearly $3 trillion. Meanwhile, Nvidia is set for its 6th split since 2000. Netflix, while not in the Magnificent Seven but part of the old FAANG club, has split twice, last in 2015. Then there's Microsoft, having split 7 times in its corporate history, but not since February 2003. And there's one more company, Meta. Meta has never split its stock, leaving some to speculate if Meta or Microsoft will be the next to announce a split, though there are no comments about this from both the companies. Splits have increased returns in every decade, including the poor-performing 2000s for the S&P 500. Given this, I won't be too surprised if Meta and Microsoft split their stocks soon. If you enjoyed this week's video, subscribe, like, and share it. See you in the next one!